Okay, so this is the US 10-year Treasury bond yield, probably one of the most significant indicators of all metrics. So what it shows normally, and what this is actually, I should have put a timescale there, from 2020, the beginning of 2020 till now. So as we can see, it drops off a cliff in March, and then it goes to nothing, and then it starts going back up because they're expecting a recovery and inflation, and it did have inflation. We had 5% inflation for the last few months, but since then it's been going down. It's been going down, and it's now down at 1.2, meaning they are not expecting inflation. They're expecting deflation. They're expecting more economic crisis. And in fact, we also see that by the ADP payroll report from last month for July, which was shocking and not reported really anywhere other than a little blip. 330k new jobs were added last month. What was the expectation? 670. It was so far apart from expectations, it was beyond, meaning it's so underachieved. We're running a hot economy, people can't find jobs, it's so hard. I mean, there's too many vacancies available. People could find jobs in 5 seconds. They offer $20 an hour to work at McDonald's. 330,000 guys, half of what was expected. That's a terrible number. And so that's why we've got the 1.2% on the US Treasury, because the fact is we are now entering Japanification. We are officially Japan. It's been bobbing along the surface for a while, but now we're finally there. What is Japan? Japan is an economy with 0% interest rates. It's had 0% interest rates for 30 years. Since 1990, its Nikkei stock market has never beaten its 1990 price. Okay, it's been stagnant for 30 years. 0% interest rates, 0% inflation as well, but quite low unemployment, must say, in Japan. But what are those jobs? People grinding to make a living. They have, obviously, as you know, a very low birth rate. They are an aging population with a negative birth rate, meaning there are now more people dying than births. And that's simply because of the fact that the young people cannot, firstly, afford to live in expensive housing around Japan. And number two, they cannot afford it because their wages have stagnated. Their wages have not gone anywhere. So therefore, they can't afford to get married and have kids. They're getting later to get married, if getting married at all. And really, that is America. That is where we're going. America also last year had terrible birth numbers for 2020, even though people were at home all day. So terrible birth numbers, and they're not having kids, and the wages have stagnated, and unemployment is very, very high. Let's take the real figures. Prior to the pandemic, 5.8 million Americans were unemployed. It is now 9.8 million. Nearly double, right? Nearly double. The numbers, they're not coming back as quickly as we thought. People are not going back to work. 330. How are you going to clear 9.8 million unemployed if you're adding, and this is on a booming number, 330. I don't expect you're going to beat that in August. 330 per month. It's very, very low, very slow, grinding Japan economy. And that's where we are. I wouldn't expect much from this economy. The bond yields are telling us things are bad. The stock market's still up, and that's due to the baby boomers trying to find some yield. So they're just piling into anything they can to get money. That's the only place that's giving yield at the moment is the stock market. But that's going to run out soon, and even that's going to crash. So sadly, we're being told things are not as good as they're portraying.